Remember that chip stocks are cyclical. They've had an incredible run. Nvidia has been the leader. But I do have to ask, I mean, it can't just always be something else just moving them higher, right? Eventually, they're a cyclical group of stocks, so sooner or later, they are going to have to trade down. We heard some people talk about NVIDIA's earnings actually being a catalyst for the quantum computing trade. Between now and NVIDIA's earnings, how do you see this trade going?
I think this is a thing where it can't always go up, but there are a lot of things here that these chip companies can kind of go from strength to strength on. When you look back, a lot of these chip companies, were starting to get boost on things like the idea of self-driving cars a few years ago, and then it was crypto, and then, during COVID, it was gaming, and now it's AI. And so I do think that there are a lot of separate catalysts that are sort of all happening one after another that play from strength to strength. And so I don't see that as sort of pure kind of frothiness and bubble. I think that there are some real underlying things there. How close are we on quantum computing? Maybe not as close as we want to think, but with the big news out of Google this week, the reality is that people are using these chips. Big, well-funded companies are going to continue to need these chips.
Over the last 2 years, Nvidia has been one of the most popular stocks on Wall Street. It has done so well that it is competing with Apple for the title of largest corporation in the world. At present, its market capitalization stands at $3.4 trillion, which is significantly more than half of the $5 trillion anticipated by Wall Street. Since the stock only has to increase by 47% to reach $5 trillion, a rise to that amount doesn't seem all that far given how well Nvidia has performed in previous years. By 2025, can Nvidia reach $5 trillion? It needs to do a lot of work. There has been substance to Nvidia's ascent. Its income increased by 320%, and its profits soared by 1,340% since the beginning of 2023. Impressive stock returns accompanied that outstanding business growth, which is why the stock price has increased 600% since 2023. Given the long-term strong correlation between stock price changes and profit growth, it is reasonable to anticipate more growth from Nvidia, particularly given the outlook for 2025. Currently, Nvidia leads all graphics processing unit (GPU) manufacturers with its Hopper architecture. Its next-generation Blackwell architecture, on the other hand, is increasing output and is expected to significantly benefit the business. When training AI models, Blackwell architecture provides a four-fold speed-up over Hopper. According to language from Nvidia's biggest customers, the company's income is expected to increase in 2025. 4 customers account for almost 40% of Nvidia's quarterly sales, though the company does not name them. One of these would be Meta Platforms, which warned investors that as it expands its network of AI computer power, they should anticipate higher capital expenditures in 2025. Meta is not alone, though. Because of the high demand for its AI computing capacity, all of the big cloud computing companies, including Microsoft, Amazon, and Alphabet, will also be increasing their investment on Nvidia in 2025. Therefore, it is anticipated that Nvidia's business would continue to grow strongly during the course of the upcoming year. However, is it sufficient for Nvidia to reach a market valuation of $5 trillion? For Nvidia's fiscal year 2026, Wall Street analysts predict a 51% increase in sales and a 50% increase in profits per share, EPS. These are remarkable numbers that may easily result in a corresponding increase in the stock price. But the stock isn't cheap at 45 times forward earnings. This value might end up being a little higher as the year progresses because Nvidia's growth is probably going to slow down. But if demand continues until 2026, it's a fair price to pay for the stock considering Nvidia's growth rates and how solid the company has grown. It is completely conceivable that Nvidia might reach a $5 trillion market valuation by the end of 2025 if it can meet these anticipated results and show that demand in 2026 will be equally as high as it was in 2025. The stock now appears to be a good investment as a result. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
When we're looking at the chip sector right now, I'm looking at Nvidia. It only trades at about 35 times. Is that a fair valuation? Is that trading at a discount to some other higher valuation names? I mean, how do you look at valuation when it comes to not only Broadcom, but the broader chip story?
A lot of the AI story is hype driven. And that means even though historically chips have been about the least sexy business in the world, we are starting to see, and we have seen a lot of that hype, sneak in. And so these are real companies. They're not always the best priced. But the reality is when you look at the broader market, Bitcoin's going from strength to strength. We're seeing the IPO market heat up again. The reality is we're in a relatively frothy macro environment. And I think that unlike a lot of those things, these sets of companies around chips have real fundamentals. And so do I think they're great price? No, but I'm not terrified of it.
Palantir and Nvidia were two of the best performing tech stocks in 2024, with its stock up over 325% as of this writing. Palantir was the clear winner in terms of stock performance in 2024, while Nvidia's stock had gained about 180%. Both of those returns are amazing. Which stock is more likely to beat the other in 2025 is the question, though. To make a decision, let's examine a few factors. Businesses with large moats are typically regarded as valuable. The advantages a business has over rivals that enable it to preserve its competitive edge and market share are known as its moat. Because of the extensive moat it established around its operations with its NVDA software platform, Nvidia is the clear leader in the artificial intelligence, AI, infrastructure market. The platform was created to enable the firm to use its graphics processing units, GPUs, for purposes other than accelerating graphics rendering in video games, which is what the chips were originally intended for. More developers learned the program to the point that it became the de facto platform on which they were taught to program GPUs, since the NVDA platform made it possible to program its processors to perform other tasks more effectively. As a result, the company now enjoys a broad moat and a roughly 90% market share in the GPU industry. The reason Palantir's moat isn't quite as obvious is because the AI software market it operates in is still in its infancy. But in the commercial sector, its AI platform, AIP, has been getting a lot of traction, and in the government sector, growth has begun to pick up speed again. Meanwhile, the business made a name for itself in government mission-critical activities, using its technology to track COVID-19 cases during the pandemic and combat terrorism, among other things. The greatest AI models are being developed by numerous big tech businesses. According to Palantir, the true distinction will lie at the application and workflow layer, which is where AI models will become commoditized. It thinks that its proficiency in analytics and pattern recognition will enable it to swiftly transition AI-powered software solutions from proof of concept to rigorous testing. It considers this to be its moat. This seems to be happening so far, but more time is required before it can be said for sure. Given the substantial revenue foundation from which it began, Nvidia's revenue rise this year has been even more astounding. The chipmaker's sales increased by an incredible 135% to $91.2 billion in the first 9 months of the year. Its revenue for the third quarter of 2025 increased 94% to $35.1 billion. In addition, it has strong margins of about 75%. Demand for the company's processors is still unquenchable, and its newest GPU design is still in greater demand than it can deliver. As big tech companies continue to compete to develop increasingly complex AI models, growth is anticipated to be robust in the years to come. Newer models often require 10 times as many GPUs to train on as their predecessors, requiring tenfold more processing power to train. Analysts predict that Nvidia's revenue would increase by almost 50% to $195.4 billion in 2025. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
The levels for this morning here, the first area of resistance that I'm looking at is 60.80 to the upside here, Oliver. If you kind of look at the trading channel that we've been in since Wednesday here, we actually have a decent range that's been put in, and you can see it with that chart. The immediate area of resistance, if you're kind of looking at that line, that upper resistance line, is sitting at around 60.75, so 60.75, 60.80. Let's see if there's going to be some pressure there. And then on the downside, if we do see a failure coming back, retesting the 60.50, let's see if that's going to hold. That's pretty much where we closed that yesterday. And if not, you're actually seeing a lot of positioning at the 60.30 level for this morning here. That gets us back into that channel that we've been kind of keeping our eye out on. Overall, the market has been, once again, consolidating. And for the most part, we've seen some weakness towards the end of the trading session, last 15 minutes, 20 minutes. We've seen a little bit of a sell-off. But on Fridays, and this is not every time, but usually on Fridays, we actually do see volatility get crushed, meaning volatility goes to the downside, which gives bulls or the market a little bit more wiggle room to be able to advance. So that's really the environment that we're in right now. I think we just have to hold tech, hold the semiconductor move. Let's see if we can broaden out some of this rally here.
Although Palantir's revenue growth has sped up over the course of the year, it has not been rising quite as quickly as Nvidia. In comparison to the same period last year, the company's revenue increased by 21% in the first quarter, 27% in the second, and 30% in the third quarter, reaching $726 million. However, other areas of its company are expanding far more quickly. Last quarter, U.S. government revenue increased by 40%, while U.S. commercial revenue jumped by 54%. But global markets have been trailing behind. Palantir has a significant revenue opportunity to move customers from prototype work to full production, and the company's customer base is expanding rapidly, including by 39% in the most recent quarter. As a result, revenue growth could continue to increase. Analyst projections, however, do not currently account for that. They predict sales growth of almost 24% to $3.47 billion in 2025. From the standpoint of valuation, Nvidia is by much the victor, with a price/earnings to growth (PEG) ratio of roughly 1 and a forward price to earnings P/E ratio of just over 31 based on expert projections for 2025. It trades at an appealing valuation. PEG ratios below 1 are typically considered inexpensive, whereas growth stocks frequently have PEG ratios significantly higher than 1. In contrast, Palantir is trading at a forward price to sales P/S ratio of almost 47.5 times the analyst projections for the upcoming year. For a business that has had 30% revenue growth, that is a high valuation that more than doubles the peak historical SaaS, software as a service, multiples. I prefer Nvidia going into 2025 because it is the obvious victor on paper, with better revenue growth, a solid moat, and a far more appealing pricing. It should perform better if analyst forecasts for both companies are roughly in line. However, a different result might be determined by the unexpected. Palantir may surpass once again if it can demonstrate that its AI platform is the greatest and obtain widespread use, which would propel revenue growth skyward. Meanwhile, Nvidia might fare poorly if spending on AI infrastructure suddenly declines. Although I will continue to use Nvidia, these are things to be aware of in 2025. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.